Forex factory economical calendar to see those high impact news events that are scheduled for today. We have our Chinese bank holiday. All right, this is an all-day event. As a consequence, most UN related currencies will see some crawl in the markets. Okay. Later in the day, in fact, early this morning, we should be expecting news announcement from the sterling pound axis. So you want to be careful trading all sterling pounds crosses early this morning. Later in the day, we'll be having another news announcement from the American dollar axis. So you have to also keep this in mind that we'll be seeing some volatility, although these news announcements don't even move the way they do usually, but we might see some volatility as they are being released. Okay, all right, let's move into the charts. We are still seeing plenty of market ranges, plenty of price non-directional biases. Let's begin with the euro against the American dollar. This is the weekly time frame. In the weekly time frame, we are seeing price hovering around a particular level for several weeks. All right, and that is why it is quite difficult to trade this pair with our trading strategies. All of these ranges here is a problematic market. It's usually very difficult to trade. Okay, the price is still trading around the weekly level of resistance. That is the most obvious swing high right here. It is an area. Price is still sitting above that level, and that is why I am saying we should not be going short against this level of former resistance, which may now be acting as support. Let's see the daily time frame. In the daily time frame, price has broken our key trend line. This is the trend line that we were looking at. Okay, that's the most outer trend line in the daily time frame, and price has broken below that line. The pullback is not up to where we would have been looking to trade the trend collapse strategy, where we would have been looking to trade the trend collapse strategy if the pullback was up to the breakout point. Okay, this is that breakout point right there. If price has made any pullback towards that zone, that is where we'll be looking to trade the trend collapse strategy. But the pullback seems to have stalled halfway. We don't trust this type of pullback. Again, if the pullback had gone into Fibonacci retracement zone, we were looking at this pair, it only scratched the 38.2 Fibonacci retracement area, which is actually not what we also want to see. We always want to see price move into the Fibonacci retracement area, which is approximately around the breakout point. Okay, somewhere around in there. Before we get that bounce, we would have traded the trend collapse strategy. In the other hand, if price is able to make a pullback to retest the broken trend line itself, okay, that's the trend line, this is the breakout. If price had moved to retest the broken trend line before the red candle closed, then we'll be happy to trade that trend collapse strategy. But right now, this is not what we like to trade. Okay, even though we have identified this area here as a level of resistance, well, there is actually, this is not really what you want to trade. If you are very specific with your lines, then you might be finding a triangle formation at that junction of the chart, not even a standard range. Okay, you might be finding a triangular formation, and that is the trick. That is when price gets tricky. That is the lower leg of the triangle itself. This is the upper leg of the triangle itself. So this pullback did not even come close to the lower leg, the broken lower leg of that triangle. We only saw price turning around somewhere in the air, and that is why we are insisting that you shouldn't go short around this area for now. Okay, you need to stay safe. Don't go short on the euro against the American dollar for now. All right, let's look into the intraday time frames. First, the medium term time frame, which is the 4 hours time frame. Here we have a falling trend line, which is the upper triangle leg in the daily time frame. This level here has held price twice as a resistance. We can keep that one. Then let's see any other level. And no, we can analyze all of this in the 1 hour time frame. So in the 1 hour time frame, we are only considering the last 5 days. 1, 2, 3, 4, 5. Okay, so let's draw our key levels of intraday support and resistance. We have Friday's low right there, currently holding price as support. That's the high there as resistance. Then we have this area here also acting as support. So we can mark those levels. Let's keep this high. And this low. Okay, then this area acting as support. Okay, so that is basically all for the euro against the American dollar. In the 1 hour time frame, you can see price has been moving from one range to the other. There is no valid setup for us to trade here in line with our trading strategy, so we are not going to force any trade. If price is able to break below this area that has been acting as support, we get a breakout, then you'll be looking to shoot to the next level of support, which is this one here. But that is obviously going to be another low quality setup because we are actually having this ranging market behavior. Okay, all right, that is just it. Give me a minute, let me set something up. Okay. Okay. All right, I think you should be able to log in now, Paul. Okay, let's proceed. That was supposed to be taken care from my end, and I have just done that. Okay, all right, let's proceed. The euro against the American dollar, we're finalizing this analysis here. Price is in the range right now. You need price to move away, and I am actually against going short. But if price breaks below this level on your intraday time frame, which is the 1 hour time frame, then you might be looking to go short around that area. Okay, all right, it's a low quality setup. We will not really be considering that for today. All right, let's move into the next pair.